For computing the accounting net profit or loss, the law says that all normal business expenses incurred in connection with the business of the company will be deductible. So all expenses, all legitimate business expenses will be deductible. For capital assets, the deduction will be in the nature of amortization or depreciation. Again, the rate of depreciation or amortization is not specified in the law. We don't know whether they will come up with a specific rates to be used, or they will allow again the various clauses of various accounting standards accepted in various parts of the country. And also any expenditure incurred in deriving the exempt income cannot be deducted, because exempt income is non-taxable income, and hence any expenses incurred in deriving exempt income cannot be deducted. Again, expenditure that has a dual purpose, such as expenses incurred for both personal and business purposes, will need to be apportioned, with the relevant portion of expenditure treated as incurred wholly and exclusively for the purpose of taxable persons business can be deducted, and others will be a disallowance. For example, mobile phones of employees. Normally, you will have to find out the personal element of that telephone cost, and you will have to account it separately, and you cannot include us or deduct that expenses, the personal expenses, from company's taxable profit or accounting profit. Let us go through some examples. Some expenses which can be deducted or non-deducted. First is commission paid to sales staff. Of course, it is a business expense and can be deducted. Another example is laptops purchased for 10,000 dirham. For example, it is a capital asset, and you need to amortize it over a period of time or depreciate it over a period of time. Again, we don't know whether they will come up with a specific rate of depreciation or something. And one, bank charges incurred against a dividend received from a 100% subsidiary in UAE. So the dividend received from a 100% subsidiary in UAE is an exempt income, which we will talk in the coming slides. And hence, the expenses incurred in earning an exempt income is non-deductible. Another example is license renewal fee paid on behalf of a related party, debited as expense in your books of accounts. Again, it is not your business expense, so you cannot claim while computing the taxable income of your company. Okay, it is very common that companies, like there are many group company, and the expenses of some dormant company was before corporate tax period. We have seen many companies accounting it in the main company, saying that this company is only kept us for the purpose of sometimes for visa purpose, or for sometimes only getting some contracts or something like that, and expenses were accounted in the main company's books of accounts. That is not possible. In the first slide, we told that standalone financial statement is needed, which means that every company incorporated in UAE will have to prepare separate books of accounts. And another adjustment is about non-deductible expenses. The lawmakers said that okay, all legitimate business expenses can be deducted, but the lawmakers also know that always there will be confusion, or people will define the various type of expenses as per their understanding, etc. But lawmakers are sure that certain expenses are not business expenses, so they have specifically included certain expenses as non-deductible expenses. One is like donations, grants, or gifts made to an entity which is not a qualifying public benefit entity. Basically, a qualifying public entity means an approved charitable organization. To that organization, it is still deductible. But if you make any donation, grant, or gift to any other organization, it is a non-deductible expenses. Then fines and penalties. Again, fines and penalties awarded as compensation for damages or breach of contract is deductible. But if you pay some penalty, like a penalty or fines to RTA by police, or late payment for VAT late payment penalty, etc., these are not deductible. And another non-deductible expense is bribes and other illicit payment. There is no need for explanation, I think. This is not, this is never deductible expenses in any part of the country. Then another type of non-deductible expense is like dividend, profit distribution, or benefits of a similar nature paid to the owner of a taxable person. Again, dividend, profit distribution, etc., is not an expense. It is merely a profit distribution or allocation of profit, and hence it cannot be considered as a deductible expense. Another deductible expense, non-deductible expense, is amount withdrawn from the business by a natural person who conducts a business or a partner in an unincorporated partnership. This is the case where, like a proprietary business, any amount taken by the owner will not be again a deductible expenses. Then corporate tax, again, it is not a business expense. It is a levy to the government, and hence it is not a business expense. Then another confusing clause is input what incurred by a taxable person that is recoverable as per law. Confusing, I said, because it says that that is recoverable. Okay, so normally if you recovered it in your business, then you will reduce it from your tax VAT payable, so it will not be an expense naturally. But if some company, due to administrative easiness, etc., may decide not to claim what related to maybe small expenses, or where there is a confusion, etc., they may decide, okay, I will not recover it from my VAT liability, rather I will expense out it. But law, if you on a plain reading, it suggests that you will have to add it back while you compute the taxable income. Any input what which you were supposed to recover but you failed to recover, again will not be a deductible expense for for corporate tax purpose. I think it may not be fair, and we believe your cabinet decision on this one. Another type of non-deductible expense is tax on income imposed on the taxable person outside the state. Again, as I said, if you have foreign branch operation, and if the profits of that branch is already taxed in that of a taxable person in UAE, then ideally you will have to include that company's income or profit here while you compute taxable income. And if any tax paid abroad, you cannot deduct as a business expense, but the tax paid in foreign country, you can deduct from your corporate tax liability. You can reduce the amount, but subject to certain conditions. The maximum allowed is 9% of the profits of that branch. If you paid more, it will be again go as a non-deductible expense. These are the certain non-deductible expenses already included in the law. Again, law has reserved that they can add anything to this one based on a cabinet decision. Now let us see some examples of non-deductible expenses. One is gifts paid to potential customers. So this is a gift, and straight away this is a non-deductible expenses. Another case is traffic penalty. Again, a penalty for violation of law, and hence non-deductible. Then is penalty levied by FTA for non-filing of VAT or corporate tax return. Again, it is a penalty against violation of law, so non-deductible. Then penalty for not meeting the project completion date. This is not a penalty of violation, but this is failure to meet some contractual obligations, and hence it is a business expense and can be deducted. And the withdrawal made by owners from the business. Again, it is a profit sharing or apportionment of profit. So again, it is non-deductible expenses. So this is these were the 100% non-deductible expenses.